Roll call, please.
John Wigheimer,
Here.
Stacy Hessel, Mark Helwig, Tom Duffy, Jeff Haney. You have a quorum. To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Certification of compliance, please.
This meeting has been noticed to the public and news media as required by Section 19.84 of the Wisconsin statutes.
That. I don't forget. Ask over. I get into the.
Oh, yes. With the new software, there's a change in how you can access your packets now. So I just wanted to quickly show you how to most easily and most accurately get them. So I'll share my screen and just go to the website. So I'm on the SawyerCounty.gov or SawyerCountyGov.org website, and when I hover over government, the big green list of options shows up, and just slide over to agendas and minutes on the left and click that open. This will immediately open to the most current date. You can see the little calendar here, and there's the 11th. So it's automatically going to open to the most current meeting, and here they are right here in a list now in the format. I'm going to click on the green bar that says Finance Committee, and it'll open it. So here's the agenda in the middle. These are not live links in the middle anymore. That's one of the changes. So on the left, where you see a arrow pointing downward, you can double click one of those and it'll open up that download. That'll be the attachments. So they're going there now. The one thing that we are not happy about with the new software, it's a lot quicker. It's many of the pieces are seamless to the way we used to do things, but it does not allow us to put on the top of the agenda a revision date and time. So we've sent a request into the company to try to get something easier, because the steps to try to make that happen are lengthy and difficult. So you have to convert it to a Word document, save the Word document, manually enter it, re-upload it, do all the steps again. So that is the point that we're struggling with. But everything else is very easy. So I have to get Mike down so that, and then we'll get you there. So that's it. It's as easy as going to the county government website.
Thank you. Public comment. Linda Zilmer.
Linda Zilmer, Edgewater property owner, a resident Village of Birchwood. And if you might extend me a half minute more, I would also like to say that I've been spending the last week or so trying to help the public through briefly what Lynn just showed you. The links at the calendar no longer work. So people have been going out to that right-hand main box and saying, well, there aren't agendas out there. They don't know that they have to go through this. I believe Lynn requested posting on the main page to let the public know about the new system and how to find things, and also to have a note on the main page about how to go to government and agendas and minutes, and that has not been updated. And it's not very mobile friendly, and not all internet connections are as quick as this one, so it can take 2 to 3 minutes for those agendas to load. So the public is having problems as well. What I wanted to talk to you about this morning, primarily though having to do with finance, is with regard to the ambulance reports that you see. It's primarily about collecting revenues, and there really isn't a correlation between a month's runs and then what the collections are for previous month's runs. One thing I've not heard or seen, and I have asked this question a few times, is what are the pay rates for our EMTs and paramedics, and also the structure of how EMRs fit into the county service. In the 2017 study, I believe it was, it was less than $2 an hour that people were being paid to be on call. Mr. Frommel told me now it's only $2 an hour. Back at that time that report was done, the Birchwood service was already paying $10 an hour, and they are paying more than $10 an hour now. So the money has an impact on actual services, and there's a lot of problems with recruiting people to service proven that, and that's a critical service that the county is saying that they're providing. Also, maybe it's worth looking at the whole pay rate structure, vehicle costs, and why is the county buying vehicles that don't fit in garages? Please watch the public safety video. Next is when the 2025 budget was done, there was not the previous year's audit to look at where that 2023 ended up or where you expected to end up for 2024. And there was not a 5-year capital improvement plan. So with the Resource Development Fund, which is primarily accumulating dollars for future capital projects like dams, there are projects that are committing whatever those balance of funds are in the Resource Development Fund. So I do not believe that they're readily available for things that have popped up at the last minute. With regard to legal fees, that is another thing that was not discussed at either these meetings or at the budget. What we have right now is we have one legal firm who is drafting ordinance amendments, and the example is the nuisance animal owner ordinance that was adopted by this county board in June. And now we have a second attorney that has been given direction to amend that ordinance. And I think maybe a policy as far as when and how legal advice can be sought is in order, because we have competing county paid attorneys drafting ordinances. And then I hope that with the audit that it does get presented to the full county board this year so that all the supervisors understand where the county sits as of the end of 2023. Thank you.
So moved.
No second.
Finance Department report.
First, we're going to hear from the audit report. We have
Oh.
April online who performed.
I was
our
looking
audit.
for the attached report. I thought, well, maybe it's just there. Okay, excellent.
I've got it here and I don't attach it to the agenda because I want you guys to hear it before it's out there for the public.
Okay,
So that's the reason for that. If anybody would like one of these, I've got them available. Otherwise, I believe Andy's going to display what April's kind of going through too, correct? I sent it to you on Monday. Otherwise, I can try to do it. I don't know how to share.
Good morning. While you bring that up, just want to verify technology. Can you hear me?
Yes.
yes, we can hear you.
Okay, thank you. Okay. Yes, the executive, I think what Mike just handed out was maybe the full audit report. Is that correct, Mike?
No, I handed out the executive.
Oh, it is. Okay, yep. Okay, so that is what, obviously the full audit report is available and that's 94 pages long. But here we'll focus on the executive audit summary where we pulled out the key pieces of information from the year. So I will start off on page 3 of 13 of the PDF, or page 1. And that's just the high level results of the audit for the year. And so the first part is telling how we issued an unmodified opinion. And so that is the highest opinion that you can receive, considered a clean opinion. So that means that your financial statements are in accordance with generally accepted accounting principles and the governmental accounting standards that you need to follow. So obviously that's what you're striving to obtain and receive each year. And so positive results there to have that unmodified audit opinion. Then we look at the internal controls part of the results. And as we do go through the audit, we are required to communicate to governance and management any issues that we note in internal controls. And so here you'll see that we have issued 2 material weaknesses. In the past, for those who have seen this and are familiar, we had issued a third one. However, due to some updates and standards and procedures that we did and Mike and Randy did on their end to review the financial statements, we were able to remove one of those. But the two that you see listed here are ones that have been reported in the past each year, just kind of due to size and makeup of the county and the limited number of people that you have kind of involved in some of the processing. So the very first one is limited segregation of duties. And so in the different processes, payroll, disbursements, making journal entries, receipting, and that sort of thing. Not one person should have access to the multiple or to the different parts of that process. They shouldn't be initiating the transaction, reconciling it, or reporting on it. Again, due to maybe some limited staff availability, not necessarily all of these are completely segregated to the extent that we would like to see. So, but what you need to keep in mind here then is to simply have like controls to mitigate the risk of anything going on in the process. So reviews by additional people and that sort of thing. So, having those mitigating controls are a positive thing, and you do have those in place. Then the second material weakness that we report is material audit adjustments. And so as I stated before, your financial statements are in accordance with generally accepted accounting principles and the auditing standards that you need to follow. However, you do look to us to help adjust some of the numbers to adhere to some of those standards. And that is because there are a lot of standards out there that you do have to follow as a governmental entity. And so, we have the background knowledge to assist in making some of those adjustments to get those reported correctly. Then the very last paragraph on this page is just about compliance. The county obviously receives a lot of federal and state funding. And because of some of those funding sources, you are under what's called a single audit for that grant funding. So we have to do some additional testing on certain programs and certain activity. And through that testing, we didn't note anything of any issues that we needed to communicate to you. So that's positive results there. So those are the high level results. And now we can go to page 6. So we're going to skip a few of these pages here, which kind of just highlights, again, some of the required information that we have to communicate to you as far as maybe estimates that go into the financials, those findings that I just noted and that we reported and other things like that. But it's in the formal communication letter that we have to produce. So we'll look at the actual numbers on PDF page 8 of 13. And here we start off with your general fund. And you'll see that we show 4 years of activities so that you can see how things have trended over the last few years and things like that. So I won't hit on every line item on this page, but key in on maybe some that had some significant changes or some that just maybe are of a little bit more importance or interest to most people. So the very top part, we have the balance sheet, and you'll see your assets listed out by major category, and then liabilities is a section underneath that, and the net of your assets less your liabilities is that fund balance section. So in the assets section, just wanted to point out, you did have a nice increase in cash and investments, which I'll kind of hit on, maybe some reasons for that as we get down further, and that you had a nice increase in your fund balance from 2022 to 2023. But one item I wanted to point out in the asset section is just that due from other funds. So the third one from the bottom of that section. And so there you'll see that you do have about $1 million outstanding at the end of 2023, where there was cash flow deficits in other funds in which the general fund was sort of loaning that cash over. And so the majority of that 1 million was from the highway that 800,000 was loaned kind of to the highway for cash flow purposes at the end of the year. And that is pretty common as far as the highway fund being low, not only for your county, but for multiple counties, as far as the cash level being pretty low for the county highway department. And that's kind of just due to timing sometimes of the maintenance and operational costs that they have had through 12/31, and then not getting some of that state funding until after, and reimbursements until after year end. Then, as I said, is the liability section. I don't have any specific line item I wanted to point out there, but where we focus our time is the fund balance then. As I said, the net of the assets and the liabilities, or what is sort of accumulated over time as a reserve for the general fund. And so you'll see, if you want to scroll down a little bit to kind of catch the rest of it. Yeah, there. Thank you. So there at the very bottom, you can see that the change in fund balance was an increase of 1.8, almost 1.9 million. And that was a result of multiple factors, as far as a couple different revenue line items being over budget. Sales tax was over budget about 340,000. Stumpage was over by 430,000. And then the interest rates in the market were obviously favorable, starting kind of last year and even into this year. And so interest earned was 950,000 over budget. So some of those factors, and then some expenditures being under budget, kind of played into this positive change in fund balance of 1.9 million. So out of that total fund balance, so your fund balance increased from 10.6 to 12.5 million. Out of that total fund balance, it is broken down into different categories, though, as far as kind of availability and the usage of what those funds will be used for in the future. So you'll see that the top portion of fund balance is non-spendable. So it's 1.1. It's actually just up a little bit. Yes, there. 1.16 million is non-spendable. And what that relates to is prepaid items and part of delinquent taxes that are in your assets, but aren't necessarily readily available in the near future, or prepaid items that cash has already gone out. It just hasn't been expensed yet. So again, it's not really available to be used necessarily. Committed fund balance of 764,000 is mainly made up of the amount that you applied in your subsequent budget. So in the 2024 budget, $750,000 was applied to balance your budget by using fund balance that you already accumulated there. So that's kind of taken out of there because it's not necessarily available to be spent then as of 12/31/23, because it's already been used basically. Then the assigned fund balance of a little bit over $1 million is what the board has identified certain uses of the fund balance to be used in the future, or set asides, carryover type balances. And so what makes up a major portion of the $1 million is about 616,000 is set aside for leave liability to be taken by your employees in the future, and those future costs that will occur. And then about 355,000 is actually set aside for ambulance at the end of 12/31/23. So once you take out those different pieces of the fund balance, you get to that total unassigned, or what is really considered available, of the 9.5 million. So you'll see that increased quite a bit from last year. And what we look at there is the percent of that unassigned fund balance to your annual general fund expenditures. And you'll see that obviously then increased quite a bit too, from the 46% last year to 62.7%. The county's policy is to have that about between 20 and 30%. The general recommendation is to have it between 25 to 33%. And when you're looking at bonding agencies and that sort of thing, they usually like to see the average that we do see with the counties, and what they're usually looking for is actually up a little bit to about 35 to 40% is where they like to see that. So you're obviously well within the ranges that are recommended and that we like to see. And so you have some funds available there to be able to continue to provide, the services to your constituents, and for those unknown costs that may come up and be incurred. So that is obviously positive results there as far as that increase in the fund balance, and then where your unassigned fund balance sits at the end of 2023. So that was the overall general fund. And then the rest of the funds, I'll just kind of focus on the ending fund balance. We don't include quite as much information in this high-level summary for the rest of them, but we'll move on to page 7 now, or page 9 of 13 in the PDF. And so here are the special revenue funds in item number 2, and these are considered self-sustaining funds. So really bringing in certain revenues, a lot of grant type revenues come into these, or charges for services, to be used for those particular activities that they are required to be used for. So the major one the major couple that you do have are the top 2 there with your Health and Human Services fund. And there you'll see that last year that fund increased quite a bit because you did move over 1.3 million from the general fund to help subsidize that activity in that fund. And that is very common. Some counties close it out to 0 at the end of each year, either with a transfer from the general fund or to the general fund, depending on how it occurs. And you were just able to move some of that funding over ahead of time, so that dependent on how each year goes, if you have some major high costs that aren't fully covered and that sort of thing, you do have enough fund balance in there to help with offset those costs. Then the second one, as I said, is kind of another major one that you report in that resource development fund. And over the last couple of years, that had been spent down quite a bit through 2021. So over the last couple of years, you've transferred some funding back into there to be used for those future projects that are identified. So last year, 300,000 was moved over there, and this year about 500,000 was transferred over there. Then a lot of the other ones are pretty similar over from year to year and don't change too much, but just kind of dependent on the particular projects taking place in those different departments. The one that I wanted to focus in on is the ARPA fund. And so there you'll see that at the end of each year, that has been reported as a 0 fund balance. However, with that fund at the end of 2023, you had spent down actually a lot of that ARPA funding that you received, and there was about $250,000 left in there that will be spent in 2024 then. So you're utilizing that funding that was received in 21 and 22 now during that time period that you're able to utilize it. And then the other couple funds that have been new over the last couple of years is that opioid settlement, where last year you started getting some of that funding, and this year the ending fund balance is at $136,000 to be used for those particular costs identified in that settlement. And then that LATCF is the Tribal Continuancy Fund. And so that was new in the prior year, and that is kind of similar to the ARPA funding in that it's a 0 fund balance, but you do have $755,000 sitting in that fund to be used for those particular purposes as well. So those are your special revenue funds, and then we move on to item number 3. For your debt service fund, and that is for that particular purpose of obtaining the necessary funding, usually through a transfer or tax levy, to pay your principal and interest each year on debt. And so generally, there's not too much of a fund balance in here, but you'll see that last year it did actually increase because when you issued debt last year, you increased your fund balance with a premium that was issued on that debt. So then you did spend some of that down, and during the year you paid 1.5 million of principal costs out of this fund and about 380,000 of interest on debt out of this fund. Then lastly, I guess in the governmental funds, there are a couple other funds that are reported, but in your governmental funds are the capital projects funds under item number 4. And so these are funds that do usually fluctuate quite a bit from year to year, just depending on the particular projects that you have going on. So last year, some debt was issued that was spent down on the courthouse addition. And then this year, some additional debt had been issued for other various capital projects that will be spent down as identified in that debt issue. So nothing real major going on there out of the norm. So then we move into item number 5, with your enterprise fund, which is your highway department. And so here we do show a little bit more detail, similar to the general fund. I won't key in on all the line items, but just a couple to note. As I said, in the assets section, you'll see that the third line down, due from other governments, a little bit of that whole no cash available, the very top line. You don't have any cash available, and you're waiting on over $400,000 from the state and other governments that you've provided services to, which is, paid and collected after year end. And so ultimately, as I said, with the general fund, when you go down to your liabilities section, you'll see there the third line down, the due to other funds, which is that $805,000 kind of loan that I talked about as far as a cash flow loan from the general fund. And so what we ultimately look at here for the highway fund, you will see that the very bottom line in this section, your net position is what it's called, or what's kind of accumulated over time, increased by 419,000. So that is positive, being that the last few years it had been decreasing by over 200,000 each year. And so you were able to, move the funds into there to pay for those costs that were needed. And with that 419,000 increase, there was 1.3 million transferred from 450,000 from the general fund and over 900,000 from your capital projects funds, where the debt was issued to be used for those particular highway projects then. So even though your cash flow at the end of the year, your cash is limited, still positive results as far as the net position increasing and being able to continue to provide those operational and maintenance services and costs. Then in item number 6 is just a small internal service fund that you have. So this is the office supplies, which it's really costs that are incurred to kind of serve other departments within your county. And so usually the balance in here is around 0, pretty minimal. You'll see that you do actually have a negative unrestricted at the end of the year. So you'll have to work to look at that as far as allocating those costs out that had been incurred, but not yet covered by reimbursements from the other funds. So that was all the funds that the county reports, which is a lot of them and a lot of different activity and services that are provided by the county. The very last item that we like to highlight and go through here is item number 7 for the long-term obligations that the county has outstanding at the end of the year. And you will see in 2022, you obviously issued over $8 million of debt. for the courthouse addition project. And then in 23, you issued $4 million more for other capital projects that had been identified. And so your overall general obligation notes and bonds outstanding at the end of 2023 was the 12.25 million. And every municipality, county, school district in the state has what's called a debt limit, a general obligation debt limit. And so for a county, it's 5% of the equalized value within the county. And so you'll see that the very bottom line here is that 12.25 million that you have outstanding at the end of 23 is only 4.6% of your general debt limit capacity, really. So even though it's gone up over the last couple of years, it's still pretty minimal. The average that we see with the counties that we work with really ranges from 0 to 20%. You know, a lot of them like you, where they're down to a very minimal amount, and some who have some bigger projects, capital projects that occurred and issued more debt, might be closer to that 20%. But we usually see it down in the range that you're at there, with a 4.6%. Then the other long-term obligation that we note here is just the vested sick leave and vacation type benefits that your employees have earned through 12/31/23, but will be taken and used in the future and paid out in the future. So you'll see that that's about 1.15 million estimated. And so and we've broken it down between kind of non-highway and highway related items. And if you remember when I was talking about the general fund and your assignments, you actually had one of the big assignments was over $600,000 was set aside for future leave accrual. So you have some of that funding set aside for when this future, when these leave balances are taken in the future. So you're obviously set up so that if it occurred, if everybody took the leave at the same time and you had to pay out $1 million, you have enough set aside to offset a lot of that cost. But that is obviously a positive thing when you're able to set aside some funds for those potential future costs. So as I said, these are kind of the key highlights that we like to focus in on from the full audit report, the 94-page audit report, and the overall positive results that you were able to increase your general fund balance and have a good level of unassigned there. And the rest of your funds are looking good as well. So.
Are there any questions? No questions here. Thank you very much for your time and presentation.
Thank you very much. Have a good rest of your day.
You too now. Thanks, Mike. Looks clean. So we'll move on to finance report.
I'll start with a couple of thoughts on where we ended up with the audit. Obviously, we're very happy. Anytime you can get rid of a finding that we've had in previous years is a positive. So to go from 3 down to 2 was great. Just to speak a little bit on the fund balance growth, we kind of hit a perfect storm recently. We had ARPA money, which was given as a revenue loss replacement. You know, honestly, we didn't lose a lot of revenue in the county, so that was a bonus. Sales tax had been growing rapidly, and stumpage as well was always exceeding. And then the big boost for 23 and 24 has been interest income. Rates have just been extraordinary, over $1 million a year, so that has helped a lot. I've mentioned before that every decision we make, every recommendation we make, we're looking 5 years down the road. One reason we've wanted to build up a little bit is that perfect storm is kind of behind us now. Sales taxes leveled off, so there's not going to be a lot of new money. It'll stay, so we have that, but it's not going to grow as fast as it has in the past. We can't count on the interest being where it is. So what we're trying to do is keep us through until hopefully one day we start seeing some carbon credit money coming in. So it's a kind of bridge to get there. So that's why we're we're purposefully trying to build up fund balance a little bit. So then moving on to my normal report, sales tax, speaking of that, it was up a little bit in November, down actually from last year, but up from years before, which kept our, with 1 month left, we're still on pace for right around 3 million. So that's positive. I think I budgeted 2.8 for this year, so we would exceed budget a little bit. But it's encouraging to see after a little bit of leg earlier in the year that we've kind of caught back up to where we were hoping we would be. On the budget report, we're about 92% of the way through the year now. And on the revenue side, everything looks really good. We've had some that are really exceeding, Stumpage being one of them. Overall, in the general fund, we're at 95% right now. That is without any fund balance pull. So we're even ahead of pace without that. And we're hoping to not have to pull any. On the expense side, we're doing well there too. Every department is right around budget. So we're really performing well. Overall, we're in a good spot. We probably will have to do a transfer both to HHS and highway. Both were budgeted. We haven't had to rely on them in the past. We did choose to do the transfer in '22 to HHS to get their fund balance up like April talked about. We do have some expenses that can really vary there. In particular, out-of-county placements can really be a budget wrecker. So we did want to increase their budget. We are counting in '25 on pulling some substantial amount out of fund balance. And for '24, we are still running behind in HHS. Almost $1.2 million loss at this point. I did dig into it a little bit more this week. Our grant money is actually doing all right. The state aid is good. Where we're really behind is on Medicaid reimbursements. Those often run very late. With my school background, sometimes we were years behind in Medicaid payments. And then 1 year, right around Act 10, they did a big catch up of about 3 years. And that was a big budget boost back then. So that's the one we're really running behind on. And of course, we haven't pulled a fund balance draw or done a transfer from the general fund yet. So we likely will have to do either of those with what they're going to need for '25. At the end, probably will recommend pulling from a general fund transfer, not HHS's own fund balance, but could be a combination of both. On the highway department, we're showing a profit now of $135,000. I did transfer the CIP money for '24. I did that about a month earlier than I did last year. And previously, it looked like that was always done with the audit. I like doing it ahead of time so I know where we're sitting. That CIP draw mostly is offset by what depreciation expense is going to be. So once that is booked, which I will have the auditors do, that will bring that highway to a deficit. And then we'll have to look at probably doing a little transfer there. Highways fund balance overall looks great, but most of that, well, it is made up of capital. There, all the equipment and everything. You saw the unassigned fund balance is actually negative. So we would like to get to a point where that is pretty much zero, because we don't want to have to sell equipment to make budget if it came to that ever. So we'll try to keep that up level. Any questions on any of that?
So I want to go back for a basic question just to,
Sure.
maybe for the sake of everybody, but so our three big buckets of income are obviously property, sales, and I guess forestry. Those are the big,
For the general fund, yeah.
right, okay.
We have, we bill for a lot of our services as well, but those are the main sources of revenue, yeah.
Right. And then the sales tax, that's primarily just I guess you would call it the tourism. Or no?
That's part of sales tax. Sales tax is made up of everything. All the locals are spending money too, which is constant
right.
sales tax revenue.
Oh, right. But it's not industrial necessarily. How much of that would be industrial?
Very little. You don't see much sales tax from an industrial.
Oh, okay, okay.
I mean, if you calculated out our sales tax income per capita, it's going to be higher than most counties because so much of it is transient spending.
Right, okay. Thanks.
Tourism is a little subjective, I guess, because,
I'm in town on a tour.
well, I would probably broaden the definition of tourism a little bit, because if we have 52% of our homes are second homeowners, that's still tourism to me. A lot of people don't define it that way, but they don't live here, but they come here and they spend money. To me, it doesn't matter if they're here for a week or if they have a second home and they're here a lot of the year. To me, it's still tourism driven. They're here because we have things to offer that other areas don't. So not everybody agrees with me on that, but that's kind of how I view it. Monthly CIP then. Not very much activity, other than I did do all of that transfer from the highway. And some of those purchases all of them are older, but that's just something we do when we start closing out things at the end of the year, is move that money over. Every other department, as they make purchases, it comes directly out of CIP. Highway is just a whole different beast. Actually, I was at a conference last week, and one of the breakout sessions, which I was thankful for, was highway. And it was very good, but what they did is they took a 4-hour presentation and consolidated it down to an hour, so it was very quick. But I did get a little better understanding of highway and just the recognition, she was from DOT, that it is a different beast in how you handle the accounting and everything. So it's nice. I would actually like to have that 4-hour presentation at some point. They do come around, so maybe we could look into doing that. Any questions on CIP? The investment report, another strong month. Year-to-date interest for all funds is now over $1 million with 2 months to go, because this is through October. You can see the rates on the right are still very strong. If you want to scroll up just a hair. Still in the high 4s, and ampersand is still over 5. I did just get my weekly CD report, and the rates are 4.15 to 4.5. So it's still, I think we're better off keeping the money where it is. Next month, I really think we might want to look at purchasing another CD. But right now, it's hard to give up that difference, which could be almost a whole point if we're on the low end of the CD. So again, just grateful for taking advantage of the investments we can right now. I'm down on the bottom. Again, I'm starting to do closing entries, and the ARPA, I did transfer the rest of that 46,345 to construction project. So we're down to just the 2 $100,000 broadband projects that are still not completed, that we've set aside the money for.
Part of the 246.
The 246, yep. So really it's down to 200,000 now, because I transferred that money. Opioid hasn't changed a lot, and again, we have not spent any of the LATCF funding yet. Moving on to ambulance billing. We're looking now at November through October data. This is always a month behind because of when we get our reports. I will say the new billing company, EMCS or whatever it's called, does get me stuff a lot quicker, which is great. The problem is it changes a lot. Like, they'll get it out really fast, but if you look at, well, actually, it's better when we get into a different report. But the current month and even the month before will always change as they get more information. They'll actually backdate to that month. So it skews some of the reporting I'm used to giving you guys, but it's nice to get information earlier. So with the aging report, we're moving in the right direction, particularly if you look at the stuff that's been out there greater than 120 days, that continues to move down. The percent current moved down a little bit from where we were, but as you can see on the top chart here, we've been with EMS, MC long enough now where they've got stuff that's out there half a year. So stuff is changing a little bit, but the primary concern is that we're not letting bad debts linger, and that continues to go down, so that's good. The average calls per month, we're really starting to level out now over the course of the last 3 12-month periods, especially 23, 24 versus 21, 22. They were up a little bit in 22, 23, but pretty much leveling out.
Well, why do you think 21 was so high?
I really don't know.
That's just guessing, I guess, but
Yeah, some of it is, it's seasonal. So like when I shift the 1 month from the bottom of one year to the top of the next, it can fluctuate quite a bit. But consistently now for a few months, 22, 23 has been higher. The average build, that's where you're really seeing some leveling out over the course of the last 3 years. 2021 was higher. We had much higher call count, and so we were getting more revenue too. But the last 3 years now have been pretty stable. And then the average collected again is pretty stable. 22, 23 was up a little bit, but we're up quite a bit now from 21, 22. Still down from that outlier year. The percent collected, this is what we want to see higher, and our goal is 50%. It's going to be tough to get there, but that is our goal. And you can see we're getting closer to 22, 23 now. 21, 22 was low. That was when we first switched to LifeQuest. Shouldn't have much bearing, but for whatever reason, it was lower that year. And then not the last slide, but the next slide is where we're getting to where we want to be. So the dollars billed and collected per call, we are at an all-time high now in the last 12-month cycle. So that's where the data really is where we want it to be. Want to make sure we're billing everything we can, and then we're collecting on that bill. So that's showing that we are. I know John's worked hard to make sure we're not missing anything on billing and training his staff to enter stuff correctly. The ambulance calls by township, same story, close to Hayward, and then Winter has a pretty high volume as well. Ambulance income statement, we're right now through October, positive almost $48,000. That's good. April mentioned that amount of fund balance that was assigned to ambulance. That amount of $355,000 roughly was what we under levied for 25. So we're using up that assigned fund balance from 23 and 25. Which if we end up with a balance in 24, we'll do the same. Any questions there? The write-offs, we've had a couple months of below average write-offs, which is good. We had that really high month followed by a couple low months. That was when LifeQuest made their big correction. I think they just looked at some stuff they'd been carrying for a long time and decided they were not collectible. So that's why there's quite a bit of variation there for a couple months, but now we're right around our running average. Again, the blue is month by month, the green line is the running average. The next slide is ambulance charges to collections. Again, down quite a bit from where it had been. Probably more typical of what we're going to see now with EMS MC versus cleanup from old LifeQuest stuff. And then this next slide is the dispatch calls versus billed runs. So this is as a percentage. So the blue line and dots are month by month, what percentage of dispatch calls we get versus what we have as a charged billed run. And then the kind of avocado colored is the running average of that. And then the solid green line is when we switch from the previous billing company to LifeQuest. And the reason I have that point in there is we were pretty consistent right around the average until then. And since then, it's been a little more volatile. Really should have nothing to do with the billing company, but it's, for whatever reason, there's been a change there. And this is where you see some of the other previous slides too, but this is where you really see that lag in data from EMS MC, because it looks like, well, we're not billing hardly any. But when I do this report next month, October will likely do a jump because there'll be more billed runs that'll be recorded. Because they're sending this stuff out really within the first week after month's end. And then when they send out the next month's, 2 months ago always changes a lot because they get some stuff they backdate. So this next slide is the percentage by calendar year. And you can see we're down a little bit from previous years. But this is one that runs fairly level. As you get closer to the end of the year, obviously you have more months, so it averages out and it gets better. Because the next slide then is the 12-month cycle, and that's where it's even a little closer. Again, 22, 23 had a higher percentage there too, so be interesting to see how things shake out with our new billing service. This next slide, I did not get any updated info. This is something we're tracking, our ambulance transport revenue by month. It's something John has been working hard to try to improve. If we wanted to get to that 50% of billed or collections versus billed amounts, this is a good way to do it because it's billed at or collected at a much higher rate than private pay and other things. Or for sure Medicaid, Medicare. And some of these can be Medicaid, Medicare, but a lot of them are insurance through the hospital, which will always pay. The next little section here is EMS MC's canned report that I get each month. And again, this comes out really early. So if you can make it a little bit bigger. This is where you can see like October is very low trip count, low charges, and that's because it's not complete data. And even September will change a little bit too. But the next one or not the next slide, but the bottom of that one where you can see the little line graph. This is what's going to get interesting when we get in a full year with them, because this chart is a lot like the ones I show you where that green bar is green line is the running average, and the dark blue one is month by month. And you can see the last month is down. I think that will come up a little bit once they put in some of that backdated information. And then these next graphs are interesting because they show the sources of the payment or the sources of what will be the payment because it's the billing. And this is where you can see Medicare Advantage are very high. Insurance is a third of either of those month by month basically. And then Medicaid is high. Medicaid MCO is about like insurance. Patient pay, which would be private pay, is about the same as insurance. So we are very, very heavily weighted towards Medicare, Medicaid, which again is going to make it hard for us to ever reach 50% collections. A couple down where you get to the pie charts, this is aging broken down by payer and by category, or not payer, current versus the other categories, and then by payer. So that kind of shows the breakdown, the percentage of what is Medicare, Medicare Advantage, Medicaid, Medicaid MCO. And those are all very high comparatively. And the aging percentage just with MCSMC is almost 0.5% current, 50% current. And then the last one's just an accounts receivable reconciliation report. Starts with beginning AR, adds on the gross charges for that month. And then an allowance, come up with net charges, and then the payments that we received that month. So this doesn't tie directly, none of these tie directly, this person was charged this much this month and it was received, that. Well, never, I don't have that data. I think I could get it. I'd really have to dig and do almost person by person. And I can if that is valuable information. Otherwise, that's why instead of really dwelling on month by month, I do 12-month cycles, because that over the course of time kind of takes out that timing problem. Any questions on any of that?
Oh, very good.
That's all I've got.
All right, thanks, Mike. Any updates from board appointed committees? Any future agenda items? Any correspondence reports from anything? Going once, going twice? All right, meeting adjourned. Thank you, everybody. Merry Christmas.